I would like to cover the topics of a strategy to forecast the price movement without open the chart or without need to know the fundamental analysis. Alright, so this strategy is all about using seasonal effect. Okay, now so what is seasonal effect? I believe that a lot of you guys will face this problem, right? Why previously this analysis like supposed to buy here one, but it keep down. Support supposed to protect and push it back up, right? But this always keep coming down one. Why it coming down again and again? Now to answer that is because seasonal effect. Because historical repeat itself at certain time, right? Technical analysis will fail one. You cannot always rely on technical analysis. So over here we can look at to something like feng shui. Alright, I'm not sure if you guys know what is feng shui or Chinese metaphysics, but in the China they right they're actually practicing this, which is they are going to measure what thing is going to happen at what time, like farming, whenever the rain will happen at the next season or not. So in trading we will do the same thing. We will predict in advance what will be the right timing for enter the market and right timing to exit the markets. Now in terms of timing wise, I believe that we are having a bit of time zone difference. Right now the time zone over here that I written is on GMT plus 8, but on your side I think that it gets GMT plus 7, right? So GMT plus 7 is that the time need to be minus 1 hour back. Okay, so the best time for you to trade anything related to AUD, NZD, and also including JPY on your side is going to be 6 to 7 a.m. in Jakarta. And the best time for you to trade anything related to Euro, GBP, then is about 2 to 3 p.m. at Jakarta time as well. Then for anything related to USD, Canada, or anything related to commodity, then the best time is 7 to 10 p.m. Alright, that is the best time. Why is the best time? It's because that in forex market is not really 24 hours. The best time is only those that when both market overlap. Because when two country of the trading zone overlap, right, the volatility increase and then the movement will increase as well. Hence, your profit will getting higher. Only this period of time your profit is higher, else your profit is going to be very small one. Okay, and also over here, this is another overlapping time, and this overlapping time is going to boost the movement in the euro related currency or GBP related currency. And then the last one will be this area, which is which is this one, right? USD, CAD, gold, S&P 500, and etc. So by showing you guys, right, how you can actually justify that if the market itself that you guys are trading is a high volatility market or not, and at what time, what you guys can use is that you can use a trading zone indicator. Inside the indicator, you can put in the trading sessions. Just put it in. Okay. Then you just navigate to 15-minute time frame. And at 15-minute time frame, what you guys can actually notice is that this is gold market, right? Definitely in London and New York session, the box is the biggest. London, New York, the box is the biggest. Tokyo is always the smallest one. So there's no point that you trade at Tokyo region. The most profitable is always happen at the New York and London. Of course, there will be some special case, but most of the time, you can see it's London and Tokyo, and London and New York time. So right now, I would like to show you guys how does the trading being done in the last 1997. And these are what we call it as a professional trader back then. And let's have a video and see how they trade. So this is how a professional trader trade last time, which is in US day, right? Which is on the exchange. And these people is what we call it as the flow traders, whereby these people are wearing their yellow jackets and they did live trade in the market. So I mean they are human. So when they trade, the market will move. Alright? And they're likely to be driven by emotional most of the time. So the thing I want to point out is that if you are trading anything related to S&P 500 or anything related to US stocks, now the best time for you to enter to the market is when they are trading, because when they trade, the market move, you can make more money. So over here, the time zone on your side is going to be 8:30 p.m. to 3:15 a.m. in the midnight. But then usually what I can say is that until the midnight of 11 p.m. right, somewhere there the market will just slow down. So you just need to focus on the time zone 8:30 to 11. That is the best time. For crude oil people, you can trade from 8 p.m. all the way to 1:30 a.m. right? This is the wrong timing, a.m. Okay, so this is a time zone for trading in a stocks market that is going to give you the most profitable most of the time. This is like just a proof to you guys that if you guys want to know the market itself that you guys are trading is a high volatility or not, right? What you guys can do is that in your MT4, right click, open up the volume, right? Open up the volume. Then you should be able to see this mountain thing. Okay, let's go to S&P 500. And you can see the pattern itself is highly repetitive, meaning that you see most of the time at morning is like slow, suddenly big spike, slow big spike, slow big spike, slow big spike, and it happened almost every day. And this is a time whereby the big player is going to come in. Okay, like the flow trader, they're going to come in all at one point, and then when you trade, it's much easier to get profit because the volatility, the movement is much aggressive. So this is something that you should be aware of when you guys are doing the trading. You trade need to have volatility. And if you have been trading for a while, right, you will notice that usually the Friday is very, very slow. Unlike other day like Wednesday, alright, usually the market is slow until you need to wait and no movement one. Right? How many of you actually experience this thing? Right? I can type a Friday into the chat box. Now the reason why this thing will happen is because it's TGIF, too good to be Friday, and people will just go to party. And although that China and Japan, they are hardworking people, they will trade, but the market movement is getting lesser and lesser participants. So when the market have less participants, technically the market will just slow down. So this is something that you guys need to be aware as well. Now, in terms of the trading itself, right, if you talk about the day of week, right, meaning that Monday, Tuesday, Wednesday, Thursday, and Friday. So within all this day of week, right, usually the volatility itself will started on Monday slowly, and at Monday New York sessions, the volatility increases. Then the entire Tuesday, Wednesday, Thursday, right, then the volatility will remain high, then slowly back down in the Friday, meaning that the most profitable time is within this period of time. Alright, so just be aware of this thing. Now, before we go into robot tradings, okay, some of you guys actually asked about robot investment for retirement purpose. Now, this thing we can actually leverage on the seasonal effect itself, meaning that with this method, you do not even need to study technical analysis, no need to have fundamental analysis, just depend on single seasonal analysis, you can be profitable already. Basically, just refer to the month that is going to be up or down, then just buy on that month or sell on that particular month. Then do nothing until the end of the month, withdraw the money. Something like that. So let's look into some case study. So over here, you can see that this is a portfolio of doing nothing. Meaning that you do nothing on your tradings, you did not open a chart, you did not use the robots, all you do is just to deposit and that's all. Alright. So asking you guys a question, right? So the portfolio number 1 at the top is that this one have a yearly ROI, yearly of 12.15%. And then this one have a yearly ROI of 9.92%. Without you do anything, minimum 9.92, top side is 12.15. Is this something that good to you guys or not? Right? Also, you need to consider the risk. The risk here is guarantee no margin call one. Just do nothing. Alright, if you think no, it's not good, I can do 2 times better, type a 0. If you think that this is good to have, actually, I can type a 5. And if you think that this is something that very good and is what you guys are looking at, can type a 10. Right? Type in the chat box 0 to 10. What is the range of the value that you're going to score for this this kind of portfolio? Meaning that this is a portfolio of doing nothing. Okay, Lee is saying 8. Jesse is typing 2. Okay, so for this portfolio, right, now just to let you guys know, okay, this is a portfolio as if you are going for investment. And the most popular investment in the world is S&P 500 and also Dow Jones. Meaning that you just focus on this market to do investment. You buy in January, end of the year you withdraw your money. That is what is being doing here. Alright, so by doing that, that is your benchmark ROI. Meaning that minimum your target is to achieve more than 12.15%. If you cannot achieve more than this, right, then might as well that you just don't trade long. Alright, because this is a minimum investment and this is a minimum of 9.93. So that is your minimum target in your tradings. Now, right now you know about trading, you know about technical analysis, upgrade a bit to get more profit. So guys, you can take a screenshot of this thing. So this is a seasonal chart for S&P 500. And what does this mean is that it tells you which month is going to be up and which month is going to be down. For an example, it said that in January, just look at the black dot. In January, it will be upside move. February, upside. March, also upside. April, upside. And then in June, it will be half. Neither up, neither down. Don't know. July, it goes up again. August, it goes up. Then September, it comes down. October, it goes up. November, it goes up. December, it comes down. So if you will be asking me, alright, I mean, I ask back you guys, right? Next month is March. So if you guys are trading in US 500, you guys should focus more to buy side or focus more towards sell side. Alright, type in the chat box, let me know. Yep, is to focus more on the buy side. Now over here, I would like to share with you guys one of the indicators that been used in TradingView so that you can check the seasonal analysis for almost all the markets. But before that, right, for those that is trading on stock, I mean, just want to ask, right, how many of you trade stocks market one? Like stock mean US stocks, right? Anyone? Right, can tell me. If you guys didn't trade, I can just skip this part. Or 3, 2, 1. No one, yeah. Okay, then I will just skip this part. So this is just an indicator that been used for stocks market or commodities market. Alright, but since no one, then we will just focus on this indicator. So this indicator you guys can search in the trading view, which is this one. 10 years, 20 years, 30 years average. Okay, so I come to my trading view. And inside my trading view, right, you just go to indicator to search it. 10 year, this one. Now, what is trading view? Trading view is just a platform for you to view the analysis, right, to do the charting thing. So over here, it will pop up something like this. It will show you, okay, in the past 10, 20 to 30 years, right? So in the past so many years, this is the average movement of the market itself. Like inside here, right, this is more accurate calculation because trading will get the most latest data. So you can see 10 years data, it is negative in March. So likely that next month will come down first. Okay, then April it goes back up again. How about gold market? Alright, you can just change the gold market and let it to load a while. Now, next month, gold market that you should focus more to buy side or focus more to sell side. Type in the chat box, let me know. Yeah, correct. It's to focus to sell side. Why? In the past 10, 20, 30 years, March is always come down. So just focus to sell lor. Euro USD. Alright. Now, for Euro USD, this part is a bit tricky because it is only March is come down, right? For the past 10 years, March is coming down. But if you look into the entire 10, 20, 30 years, right? Technically, the market have changed a bit, right? The behavior itself, the market changed a bit. So that's why in March itself, it can still focus to sell, right? You can still focus to sell. Why? Because it is the highest negative number in the entire years, right? So you can focus to sell more in March. And then it will be going up at around June, August, or even December. But for now, we just focus on the March, it will be coming down. And even you can see February is negative. Let's look into the real chart. Okay, so this is the entire February, right? From a seasonal analysis, it predicted that February, for the past 10, 20 to 30 years, it always coming down. So the answer happened in February. It is always coming down in the entire February. Meaning that even though you don't know anything on technical analysis, simply follow this, you can be profitable already. Alright, that is what I want you guys to focus in, which is pretty simple, right? Alright, and for oil, I also would like to point out this thing as well. Now, the reason why I exposed so many opportunities for you guys to see, so that whenever you trade, you not just focus on, oh, I only trade on Forex, I only trade on gold, or I only trade on US stocks. At least you should see right now, opportunity is everywhere. It's just that it's high opportunity or not. So for this case, right, oil market, if February is entire month going up one, then March maybe slightly come down. April maybe slightly come down. But May, you see, in the whole year, May, 1 month on average can get 9% going up. 1 month only. Wow, damn good opportunity, right? So I don't think that you can see other markets that have 9% going up one. So definitely if you want to trade, and that is a May, you just focus to oil. Then afterward you focus on another market. Just keep switch the market that's showing you the most clearest seasonal analysis on that particular month. Alright, if it's like very low value in among all, like this one, 0.01, it's very hard to trade on this type of month one, because it could be up, it could be down, 50-50, very unknown. Okay, so the next thing that I want to talk is about the seasonal analysis for gold market, and not sure that how many of you actually aware of this thing, but you can see January, right, is always going up one. Okay, January is always going up. So that is actually the seasonal analysis of gold market. If that month is basically a January, you can just confidently buy all the way up. As long as it come down, dollar cost average, because it will go down one. On January, then you can only tell me it will go down one. But then if it's on July, if it's on March, then you can say this thing, it will come down more likely. Okay? So by knowing this thing, right? By knowing this thing, for gold market, the best month to buy is which month? Right, type in the chat box. The best month to buy is which month? Okay, wrong answer. You guys should focus to buy at December. You cannot wait to go out and buy right? You see, September, October, November, December. down, 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 down. Whoa, the lowest of the entire year. What we call it as the cheapest promotion, right? The cheapest promotion, then you only buy lah. Then January goes up right? And this effect itself will be earlier, will be shorter, we don't know. So that's why we need to be prepared in advance. That is the reason of seasonal analysis. It's not to know what month later will happen. It's to prepare in advance. Right now it's March, right? Right now it's March. Then we buy at no, right now it's March. We sell earlier at February. Can or not? Then it come down at March. So that is the reason of using seasonal analysis. And for confirmation, right? You did not get confirmation from here. You get confirmations from the indicator itself, which we're going to talk in a moment, alright? And talk about oil right now. Okay. So for oil, which are the month that is the best to buy oil? Alright, April, right? So you guys get the idea. Prepare in advance. But does it mean that you should buy immediately? Oh, 1st of April, you go and buy. Cannot. Later will be margin call. You wait a bit. Wait for indicator to tell you that you should buy, you should sell. Of course, later you have to do the relevance risk management lah. Dow Jones. Okay, Dow Jones is the best US stocks that have the biggest volatility, which you want to trade stock, this is always the best market I will suggest to go to. Now, right now, this is an easy buy market, just to let you guys know. It's an easy win market. Why? Almost like all green one. Like the whole year is all green one. Easy buy, easy win. No need to do technical analysis. Majority of the people will just win over here. It's just a matter of time and matter of capital. So over here, right, we know that next month will be coming down. So what I will do is that I hope Federal Reserve, please increase your rate further. Please destroy your economy further. So in March, it will drop even further. Of course, I'm standing at the perspective that I'm not US people. So I hope that US is doing bad in March. And I hope that all sort of the indicator in fundamental, I don't care what is it, but I just hope that the value come out, US is going to crash. Dow Jones is going to crash as much as it can. So that at April, I can be easier to be profitable, right? That is a perspective as a traders. We are predicted in advance that what will happen already. So when you are trading last time, right? You will feel weird that why the news come out, it come down one? Why the news drop already? And why the news is positive to US? And it's supposed to go up, but then the real life is that it come down. GDP open, positive then S&P still down. You open up CPI, positive S&P down again. Okay, how many of you actually face this thing problem, right? You can type haha in the chat box, especially when you do it with fundamental analysis. Now the thing is that this kind of thing, you think the government don't know me? You think that the authorities, what do you call it, the people that make decision, they don't know all these things, man? They know one. Alright. They also would like to invest. So they predict in advance. They are not manipulated. They just want to make the numbers reasonable to fulfill this kind of movement only. Alright. So in that sense, that's why I always prefer to have seasonal analysis, as in like it can give us a more holistic view on what is happening in the market and how to actually prepare in advance in terms of any fundamental or any technical move. At least here have a backup of the last 10 years already. Can TradingView also visualize the best month to trade based on the midterm election seasonality? Okay, so for midterm election seasonality, that one I studied before, and I would personally say that it is not so good. Okay, it is not so good and it's not so repeatable, right? It's repeatable, but then the profit is very small. So I don't even consider that part. Now, talk about seasonal analysis, right? What I can actually show you guys is AUD USD. Okay, and AUD USD, you can look over here. Oh, which month is best to sell? Okay, which month is best to sell? No idea, right? September, October. Okay, now when I look in this, right, I also don't know what is the right answer. So I open up another indicator, call it as okay, seasonality monthly highlight. Okay, so you need to have this indicator in order to plot the thing for you guys. Okay, I go to the lower time frame and to plot the monthly chart. So I plot August. Okay, I plot August and then September. Okay, so this is a 4 hour time frame. So this itself is August and this itself is September. And notice the pattern itself, right? Notice the pattern. On August, this is like this, right? Coming down, coming down. In 2022. In 2021, August. 2020, August. 2019, August. Oh, I need to upgrade. But let me just go to another account. The okay, you can just search seasonality. Monthly highlight, this one. Okay, you can put a star here to bookmark it. Then you can put it in. I would like to see on this too. Okay, then we go to AUD USD. AUD USD. So let's look into back 2022 like this, and then 2021 like this, 2020 like this, alright. 2019 or 2019 coming down, 2018 coming down as well, 2017 going up first and still come down, 2016 come down, 2015 all the way down, 2014 come down as well, 2013 is coming down, 2012 up then down, up and down. So what I actually have observed over here is that majority of the time AUD USD is going to be coming down unless there is an economic crisis like 2020, right? In 2020, that is probably the only month that is going up and is consecutively going up, but the next few months is still coming back down already. So if you can, right, because here to the highest one is just about 5,000 point and is very low risk. So you can just focus to sell around around August, right? Around August to September. Okay, August to September. This is a period whereby the market itself is most likely to come down, unless it is due to what we call it as due to like COVID lah, due to economic crisis lah, which is they assume it's going to happen, but then it's not happening right now. So technically, right, we can just be safe to say that okay, market likely to be not coming down very soon. All right. Now you can use this same indicator to calculate and see how does the gold market move in the January-December seasons, such as this. Okay, so in last year, right, I mean this year lah, right, this year. So I believe that I showed you guys a case study, right, how I achieved 150% ROI in the gold trading. Basically, I just do nothing. I just December buy. Okay lor, I buy lor. Okay, of course I calculate well my risk, right, which on cover day 2. But December just buy saja, right? Buy only, then January goes up. Then you have to know how to protect your profit, which you're going to use the robot to do it. But you just need to know that prepare at December, at January it will just be your battlefield. Then you have 2022 buy saja. Now 2021, this is the special case. So that's why I said buy at December. Okay, when there is an economic crisis or something so huge that it's going to affect the whole world, right, seasonal analysis will fail. But then still going up, you see. 2020 still going up. 2020, alright, so that's just like 2021. This is 2020, still going up. And then 2019 also going up. So sort of like easy win for gold market. Meaning you literally can do nothing, just wait for the whole year, then go all out for one day, right, for that particular month to earn the most profit, right? The strategy here is slightly different. The strategy here is that you just buy the most profit in 1 month, 2 months, right? Just January, February, and then use that big cash to use it for the rest of the remaining month, right? So that is a seasonal strategy for people that's a bit of busy lah. So this is the case study, right? We have studied all the way back to 2003, right? Almost every single year, when near to the year end, before the Christmas, the market is going to start to go up already. Okay, before Christmas, market start to go up. And by the end of the Chinese New Year, the market will start to stop and then pull back down. Okay, so this is something that you guys need to be aware of. Very, very good strategy. But this document down, alright, I've actually put it in the membership website. You can just scroll down, see this, right? Gold trading strategy, 150% in 2 weeks time. How we did it. There is a bit of instruction SOP that you need to follow, so it's inside here. And this is a 2021 case study. So just put it into this way. When market pull back down as much as it like, hopefully as more as it can, then it back to ranging first. Okay, we wait for that ranging. And then the ranging, as soon as it break up, like what I do it here, when it break above, you can make a buy. Okay, then it goes up, take profit, set, break even, set. This is where I close it. Just let it fly. Alright, just let it fly. I don't even need to worry that what if the market crash down. It crash, I like it more. If it goes up, I will feel sad. Alright, I earn less already. Okay, so this is a gold seasonal analysis and can be used in almost any market, especially related to stocks, commodity, that is even the best. Okay, so with that said, how many of you actually feel that, wow, technical, this kind of seasonal analysis is something that very, very simplified. It's very easy, right? You can type easy in the chat box. So knowing the technical analysis itself, right? Right now, we would like to talk about the robot part. But before I go into complicated advanced robots, let's just start with something that everyone understands. Moving average strategy. An easy, convenient, and stable robot trading. So I would like to test understanding first, right? How many of you actually heard of this moving average strategy? Right? Type the MA in the chat box. And how many of you actually first time know MA? Right? Type 1. If you heard MA, you used MA before, type MA. If this is the first time, you type 1. So I know that how can I go in? Okay, everyone used MA before. So I will go slightly faster to explain how does it work. Now, to give you guys a quick overview, how does the moving average indicator been used properly, right? Is that suppose moving average should only apply in the daily time frame only. Why? because it is a daily time frame indicator. Okay, now I know that there are lots of strategy that I've been using in lower time frame, which is not so suitable, just to be honest. Why? Because the design of moving average, let's say that I use a common one, 10 and 20. I set up this red color, and then set another one to be 20 to be blue color. Now, the design of moving average is to capture trend, right? Meaning that this is not considered a trend line, right? Consider as a swing up, swing down, swing up, and then swing down. So by that means, right, moving average need to have big up move and then big down move in order to capture the profit. If you're using in 1 minute, 5 minute, die lah, right? The 1 minute, 5 minute also don't move. How can you profit from there? Okay, and moving average of 10 refer to the average price of the last 10 candlestick. For an example, let's say that right now the market is here. Okay, this is the 10 moving average. So it basically calculates that the average price in the last 10 candlestick, which is here. Okay, average price, and then plot it here. Okay, just nice, average. And with that said, this is average price with when the price is moving above it, it means that market have more and more buyer. When it is moving below, it means there is more and more seller. Why? People willing to buy at even more expensive, right? Above is called as expensive, below is called as cheap. So if it's keep on expensive means keep on going up, people are aggressive. Keep on going down means people are aggressively selling as well. Now, the most basic way that people use to do the trading is that people will just buy, okay, buy when it cross up, sell it when it cross down. The most basic one. But there is a problem. Okay, you can see that if people show why you see cross out, you buy, you can enter cross out. As soon as cross out is not here, is here. Okay, don't get misleading. It's supposed to be here because it cross up, it should be here. You can say, why is it you buy goes all the way to here to exit. Okay, you see, such an easy profit. Then is it cross down, you sell from here down to here. Still haven't closed yet. Seems easy, but the biggest problem is that not here, it's here. How can you be profitable when the market is like this? Like when it cross down, you can sell, but sell from here. From here, come to, you exit at here. Okay, first trade can profit. You buy, okay, when you buy, it comes down. Then you sell, it goes back out again. Then you buy here, right? Then it pull back down. Meaning that every single time when you enter the market, you make a buy it down. You make a sell, it is suddenly goes back up. It's always against you. Alright, how many of you actually face this kind of problem? I can type a me in the chat box. So the thing is that when you're facing this kind of problem, right, it's not your problem. Okay, in a sense, is you did not learn fully yet the strategy to swap. Now, in this kind of situation, right, who asks you to blindly follow? What you're supposed to do is to reverse the entry method. Like for an example, when it crossed down, you can sell, right? And when you notice that it's back to a ranging, right? This is what we call a ranging. When it's come to a ranging, when it crossed down, instead of you make a sell trade, why don't just make a buy trade? You can buy low, sell high, because you can sell from away from moving average. Correct? And like this case, right? This case, it goes up, then cross down. Cross down, you make a sell. Then it goes out again, then you make a stop loss. So then you will get frustrated what is happening. So over here, okay, I teach you guys one simple strategy to actually make this strategy even better. The problem of this moving average is that it got too much noise and we need to stretch a bit. How to stretch? stretch it as less noise as possible. Like this is what we call as noise. Up down is a noise. So how you do it? This is moving average length, right? 20 average, not enough. Go to 25. You see it getting smooth. Then you got 30. Then you got 35. You see getting lesser and lesser noise. Then you got 40. Much better, right? More linear smooth line. Red color one you can also adjust a little bit, like 15, 20, 25. And you see when I adjust to 25, it cross up, I make a buy trade and can capture profit at here. But much better than just now. Enough. You're still in, still lose here, right? So this is one of the things that you should be doing, right? And the step that you're doing here is what we call it as optimization. Is to find the best setting. Best setting for this particular market, for this particular time frame. Okay. So now over here, I also would like to talk about moving average type, because moving average, the one that I'm using here, is what people call it as SMA, simple moving average. But for me, I will actually having my personal preference, which is moving average weighted. Now, weighted moving average is a same moving average, but then it is more linear, meaning that it will actually draw like a straight line. Let's put it to be 40. So you guys can see, right, if I turn off this, the blue line and the green line, right, these two lines is both same period of 40 and 40. But then because of this moving average, right, is weighted, okay, it is pulling more toward the existing price, hence the signal is much more faster. Okay, you can see it is always either that is above the blue line or below the blue line. Okay, and you see it is more like a straight line, straight up and then straight down, right? It's very beautiful one. And then you add in like this kind of indicator. Of course, then you have to retune the setting again, because in the end, right, your end goal is to make sure that the moving average cell, the trend line that you've been drawing inside the chart, right, later, right, the moving average combination is going to be as tuned to the current market. That is what you guys are supposed to be focused on. Okay, now this is just a big idea here, right, on explanation, but the most important thing is MT4. Now inside the MT4, right now the robot that we would like to talk is about moving average light. Now right now let's go to MT4, open up your strategy tester here. Here is the place that you're going to test how the robot works and how you can actually optimize to get a better result. Over here you can click on this thing. You will search for moving average line. So it's supposed to be inside Alpha Masterclass, moving average light. And the market we choose, just take it as gold. 30 minutes, for example. Now, right now the spread for the gold. So conventionally, the gold spread should be around 20, 20. But certain broker can go to 30, 30, 40, 60, 70. Rule of thumb is always pick the lowest spread. Okay, pick the lowest spread, because the higher the spread, the more the cost on your side. Alright, so I put it 20 first. And let's just backtest it across 1 year period. Okay. And in the expert properties, these are the setting. Okay, I just reset first up. So I do this thing, right? Take everything here. And you guys take a screenshot. Okay, can you guys help me to take a screenshot? Because later I will explain this. So you take a screenshot first. Once you're done, right, type a done in the chat box, let me know. 3, 2, 1, done. Okay. Now it's a click OK. Then I start first. Now, what I'm doing here is that I would like to find the best moving average value the fast line and slow line, find it automatically for me, and then ask it automatically find the best take profit, best stop loss for me. Then I can just get the setting from there. So what I do right now, I would like to do optimization. Then I click start. Optimization means find the best setting for me. Okay, so right now let's go to my screenshot there and I explain first how does this work. So the fast moving average and the slow moving average is basically, it means the red line and the blue line, right? Red line and the blue line. And moving average type is included to be three. Number one is the SMA. Number two is EMA, and number three is linear weighted and moving average. Linear weighted is the one that I'm showing just now. Okay, so you can do optimization from 1 to 3. Alright, so this is supposed to be 3. Okay, correction lah. Okay, we stop first. Suppose that this number should be 3. Okay. Okay. So over here, you know the fast moving average, you know the slow moving average, you know what is moving average type. Right now it's a signal shift. This is important because if you look into here, right, let's say that you are having, okay, you can just go to Google search, indicator there, search for moving average line cost, right, this one. Moving average 2 line cross. Now over here it is using by default 9 and 18, right? Just let's put it to be 10 and 20 first. Moving average of 10 and then 20. Okay, what does this mean is that this is sort of like a indicators for you guys, or it's like a signals provider inside TradingView. So as soon as it cross up, okay, see it cross up, it tells you that wait, this is the place to buy. It cross down is the place to sell. And cross up to buy, cross down to sell. Okay, so you can basically see how it works directly. Now the question is that this isn't seems like a perfect entry. For example, let me just, okay, so this doesn't seem like a perfect entry. The entry can be even better. So the shift is a sort of like, instead of you buy at here, it shifts slightly toward the right side. Mean that you buy here, then instead of buy here, you buy here, or here. You shift a bit toward the right side. Okay, like this one. Actually it's doing quite good lah. Let me just first search for other example. Okay, this one. So you see, it crossed down, it make a sell. Pretty good. But suppose that it should wait for pullback ma, right? So instead of sell here, we ask the signal, wait for 3 candlestick, meaning 1, 2, 3. Only at here, only you enter back. So that is what the purpose of moving average signal shift. We shift how many candlestick. So let it automatically find the best shift for us. Now, cross entry method, cross up buy, cross down sell. But if you use the value of 2, meaning that it will do the opposite side for you. When it cross up, it will sell when the value is actually 2. Now, cross method for exit. Okay. Now, what is cross method for exit means? Cross method for exit means that how you want the robot to close the trade for you. So you can just write it down in your notebooks. If you choose to be 1, here, right? If you choose to be 1, that means that when the price cross above the fast MA, it will just stop it, right? It will just close the buy trade. Cross above is fast MA, then it stop. Okay, sorry, not cross up, cross down. And if you type 2, it will be in if the price cross below slow moving average. It will type to be 3, then it will be fast cross below the slow one, and your type 4 means nothing. Don't close at all. So this is 1, 2, 3, 4 for the cross exit method. And we don't know which one is the best. Just ask the robot to find a setting for us. Lastly is take profit percent and stop loss percent. Take profit percent by default I put it to be 2 and 2. Meaning if you make a buy at this price, right? Let's say the price is $100. Then the stop loss will be 2% down, which is going to be $98. And then 2% up, going to be $102. This will be your take profit, and this will be your stop loss. Alright, take profit and your stop loss. So this is how does a robot operate right now. And when you have take profit and you have stop loss, right, you can actually reverse calculate how much that the risk that you're willing to put in per single trade, right? Per trade. Meaning that you buy. What if the price come down, hit your stop loss? How much that you are willing to lose? By default, 0.1 lot. Right? 0.1%, right? So this is on percentage. Lastly, what is the maximum lot size that you are going to open? Because your account may be very small, or because your account may be compound over the time. Hence, you actually would like to increase or reduce this maximum lot. By default, just leave it to be lah. Okay, just leave it to be. So far, is it clear? Okay, so far is it clear? If it's clear, can type a clear in the chat box and let me know. Okay, very clear. Right now, okay, we are doing optimization, and this usually will take some time. So I run a 5-minute optimization over here. And most important thing, you can come to optimization result, right click, and then make sure that this thing is unticked. Okay, this thing is unticked, which is not being ticked up, so that you're able to get the correct setting. Okay, Ethan, just want to ask, right? So the strategy tester need to be run first before we run the robots to find the best setup. I don't get it. So the strategy tester, I just open it up. Okay, I just open it up, then it automatically having this thing. Then I do whatever the thing, right? You just do the same setting as mine. Okay, just do the same setting as mine. Then you can just click start with optimization tick. Meaning with that, you will get the best setup, right? Best robot setup. So over here, you can sort according to your profit. $600. Now let's just pause it, right? And stop it. Okay, for you guys, you should complete it fully, right? Should complete it until it run all green. For me, I just want to teach you guys faster, so I just stop it. In the optimized result here, okay, what I can do is that I can sort it according to the profit. Then I can see relevant profit, total number of trade to be open, profit factor. So write this down. Profit factor in the most simple way to understand is your risk reward. So write this down. Profit factor equal to risk reward. Then you got expected payoff. You got your drawdown in dollar, and then your drawdown in terms of your percentage. The account size that I'm using over here is $1,000. Okay, $1,000 account. So right now we are finding the best setting. 1 year, right? 1 whole year period, I got $600 profit, which is 63% ROI. What you do right now is that double click, then start. When you double click and start, you will get into this kind of page, which is your result, which is like this. And if you open up the charts, you can see 2 moving average line. I think that this is the first one. Okay, just leave it to be lah. Now you can look into certain thing lah. Like let's say that I'm interested at why the robot is losing so much at this point. Just double click. Okay, double click this area. Then you can look back what is the things that is losing. Oh, it make a sell trend, it come down a bit, but the rest of the time it keep uptrend all the way to here. So no choice, it end up with some losses. But you can look into how the trend makes, right? It buy some losses, sell small profits, buy losses again. Then it back to what it's supposed to do. Sell profit, buy break even, buy big profit. Now, yeah, so it sell from here to here, buy from here to here, sell from here to here, buy from here to here. So the thing is that if you look into the actual properties and input there, notice that what is very special. Your fast moving average is 177. Your slow moving average is 99. And then your cross entry method is 1, which is like normal. Meaning that, what does this mean? Meaning that your fast moving average is the 177 and this is actually the slow one. The robot intentionally designed it to be this way. Why? Because it found that this is actually most profitable way by doing like this. Let's put it to be this color. Okay, so the idea here is that when the red color line cross below, right, like this is called as cross below, it make a sell. When it cross above, it make a buy. Still the same thing, it is just that this kind of strategy will be more profitable on a ranging time. Okay, on a ranging time. But on a trending time, your result won't get affected one because no pain. Okay, it's just one single trade. Maybe there's a chance to recover, or maybe no. But just one single trade. And you do have stop loss evolve, which is stop loss right now is about 9.9% for the entry. So it's a bit huge. So what you can do is that we need to do multiple check of other setting to benchmark better. Okay, so what I do right now is that I take a picture of this graph and then we compare later. Now, from the optimizer result here, right, other than choosing the highest profit, you can choose the highest profit factor as well. Highest profit factor means highest risk and reward. But then you cannot take the one that have two less trade, right? Need to be slightly more. Okay, it's probably this one because this have the highest risk and reward, and total trade still fine. So I double click and click start. Then I got a result something like this. Okay, this is the best profit factor. Best profit factor. And then I can also analyze based on the expected payoff. Expected payoff is your profit per single trade. Okay, profit per single trade. Of course, you may not pick the highest one because two less trades, right? So you need to be reasonable. Like this is a 1 year back, 1 year testing. And in a year, how many trades that you think that's supposed to open? Hundreds? 200? Okay, then you search accordingly. So for me, 70 something is quite good. Okay, let's just pick this one. You run, double click, and you start again. Alright, so it looks very similar. Lastly, I would like to sort according to profit again. I just don't want to take the highest one right now. I take slightly lower. Okay, maybe this one. Okay, so right now I've taken 4 of the result. Now, looking at the pictures over here, right? Which one that you guys will pick actually? I found that these two is very similar. Right, this is from profit. This is from the profit. This is on the profit factor. And this is for the expectancy. Okay, which one that you guys will actually prefer to pick in terms of the graph itself? Right, type in the chat box. I put it in the like this. 1, 2, 3, and 4. Which one is more preferable by you guys? Anyone? Now, looking at this, right? All these 4 is profitable. So, in the most simple way, you can just pick any one of these. Alright? But for me, I definitely would prefer to have consistency. So when talk about consistency, of course, these two is not part of my consideration. And I also would like to have more profit as well. So if I want to talk about more profit, then definitely less choppy will be better. So this one you can see is choppy, up down, up down, up down, up down. This one less choppy, it just considered to be smooth growing up. But then the problem here is that the TP stars is very huge. So you can actually do more final search lah for the setting itself to see that if you got a better option from here or not. Alright. So you can see, look at the take profit percent here. Okay, just look into here, profit percent. So actually this one seems to be better, or even this one, because the stop loss is only 6.5%. Hey, we got 4% one. Yep, this one. The stop loss only 4%. Take profit is 5.4%. Pretty good. So I double click and run it and test how. Okay, so this is the result of it. Now, right now, let's do about risk management side. How to do it? Right now, you would like to do risk management. So previously we used 0.1% risk per trade, meaning that, okay, when you lose, you're going to lose. Okay, so this is your stop loss. Okay, not this. Now, just a simple way. You have $1,000. Okay, $1,000. Your risk 0.1%, meaning that at most you lose $1. Right, so that is supposed to be a stop loss. Okay, then it will have a maximum lot size for you to protect the account. So right now 0.1 is pretty good. Okay, we can see a consistent result. Right now you can slightly increase the risk that is reasonable, like maybe I change to 1%. Okay, then I click start. 1% risk per trade and I do not need to open all the time, because just one trade at a time, and this will be my result. 1 year 100%, is it good enough? Win rate of 62.80%, with a drawdown of 17%, 100% ROI in exchange for 17% of drawdown. Is it good to having this kind of strategy? You do not do any fancy thing, just moving average itself, enough for you to be profitable. Okay, Bambang said good. Right now, if it's good, then we're gonna put it into live market So how to put it into live market? See, in the setting here, this is your setting, right? Now the simplest way is to take pen and paper, write it down in the paper form, then when you just attach it, just copy exactly the same. So right now I'm going to teach you guys a method to simplify the process, which is you can save. Okay, you can save to anywhere. For me, I save to desktop. Okay, and after that, I have saved my setting I would like to apply this strategy into Go 30-minute chart. So I just open out a new chart, Go 30-minute chart, and drag the robot in. Okay, moving average line. Drag it in. You load. Okay, load from here. And all these settings you just key in for you automatically. And after that, just click OK. Make for some time for the server to update. Okay. Then when you see this waiting server confirmation means that you have done. Okay, basically mean that you have done. Then it will come out with a table to show you that what is the time now. Just make sure that the time now and the broker time is both the same. Okay, make sure that they are the same. So by doing this means that you have already used the robot in the live market. Yes, you are done. Okay, now I just want to make sure that you have the robot in a smile face so that it can run properly. Okay, so back to the slides. How to apply robot into the live market. So just now I have demonstrated one of the way, but for your convenience, just please record or screenshot this photo so that you know how to actually properly do this in the MD4 yourself. So first of all, you need to first enable auto trading. Okay, enable auto trading from here. And the auto trading here will actually means that robot can trade in my account. Okay. Find for the relevant robots, drag it into the chart. You can just key in all the settings in the input tab. Then just click OK. For me, just now what I did is that I just make a load. Okay, I load the settings that I just saved from the expert properties. When you put it into the chart, you can see that it is smiling. It means that yes, the robot is running correctly. Now to stop the robot, first thing first, you have to stop the auto trading first. Make it to be red color so that you can enter to the next step. Which is your next step is to right click on the chart, expert advisor, and then remove it. Remove the chart, then the robot will missing, right? Will not be here anymore. Then you can close any trade that is opened by the robot already. So with that said, that is the robot part that I would like to cover today. And is there any questions? If there's no question, then we are going for a lunch break right now. And we're going to come back in 1 hour time. Okay, we're going to go for a lunch break and we're going to come back in 1 hour time. And before you guys go for a lunch break, right, please help me to fill out the forms here so that it helps me to understand that what are the problems that you guys are facing in trading, any specific type of robot that you would like me to focus in, and yeah, so that is basically something that we will actually review during the lunchtime. So please help me to fill up as fast as possible. All right. And with that said, see you guys in 1 hour time. And if you guys have any questions, type it to be more. We can answer from there. See you very soon.